Listen closely because what you are about to hear is not speculation. It is a coordinated signal leaking through the cracks of a system under pressure. And if you blink, you will miss the setup that could redefine XRP and Bitcoin positioning for the next cycle as Wall Street quietly rearranges the board behind your back. Because while mainstream media distracts you with noise, something far bigger is unfolding involving Ripple, Bitcoin liquidity flows, and institutions like BlackRock, the IMF, and even the SEC playing a dangerous double game that nobody wants to talk about. And here is the insane part. The timing of this alignment is so precise that ignoring it now could be the biggest mistake retail investors make this decade. So before we go any further, smash the subscribe button, turn on notifications, and lock yourself in here because this channel is where the dots get connected long before CNBC pretends they saw it coming. And understand this, Bitcoin dominance narratives are being pushed aggressively for a reason, while XRP is being quietly boxed into a regulatory narrative that looks restrictive on the surface but is actually creating a moat that institutions crave. Ask yourself this extreme question. Why would the SEC soften language around crypto custody while global banks quietly test Ripple infrastructure? Why would BlackRock push tokenization language just as Bitcoin ETFs normalize legacy exposure? And why is the IMF suddenly obsessed with cross-border settlement efficiency at the exact moment retail sentiment is being crushed? This is not coincidence. This is sequencing. And in part one, what you need to grasp is the setup. Bitcoin is being positioned as the liquidity magnet and volatility sponge, while XRP is being shaped as the transactional rail that survives regulation. And when you understand that duality, you start to see why insiders are calm while retail is panicking, because capital does not move emotionally, it moves strategically. And right now the strategy screams accumulation under confusion. So take a breath, stay focused, and realize that what you are hearing now is the foundation for why the next moves in XRP and Bitcoin will shock people who thought they had more time. Now we escalate because data does not lie even when narratives do. And what the numbers are whispering right now is borderline explosive if you know how to read between the lines. Because while retail stares at short-term price candles, institutional data, regulatory filings, and liquidity metrics are telling a completely different story. One that links Bitcoin and XRP in a way most people are not psychologically prepared for. And here is where authority enters the room. BlackRock does not move without mapping 10 years ahead. The SEC does not soften posture accidentally. And the IMF does not suddenly care about settlement rails unless a global liquidity bottleneck is approaching. Look at Bitcoin first. ETF inflows normalized volatility and effectively turned Bitcoin into a regulated liquidity sponge for legacy capital. That is not bullish hype. That is structural positioning. Bitcoin is being transformed from a rebel asset into digital collateral. And collateral always precedes leverage. Now pivot your attention to XRP. Ripple's technology stack is being name-dropped in central bank research papers, BIS discussions, and IMF white language without explicit endorsements because plausible deniability is the game. And yet pilots, sandbox approvals, and quiet integrations keep surfacing. WTF do you think happens when regulated liquidity needs speed, compliance, and interoperability? It does not choose memes, it chooses rails, and XRPs on ledger efficiency, deterministic fees, and regulatory clarity post-SEC pressure makes it uniquely boring in the most powerful way possible. And boring is exactly what institutions want. Now ask yourself this brutal question. Why would the SEC drag Ripple through hell only to let other projects get obliterated later? Why was XRP forced to mature early while the rest of the market played casino? Because survivors are chosen before crises, not during them, and the data backs this up when you track wallet behavior. Long-term holders are not exiting XRP in panic, they are consolidating, while Bitcoin sees rotational flows that suggest preparation, not distribution. This is capital rotating seats before the music changes, and the authority layer confirms it. Larry Fink talks tokenization, not price. The IMF talks rails, not speculation. And the SEC talks compliance pathways, not bans. Connect that and tell me this is random. This is the chessboard, not the checkers table. And once you see it, you cannot unsee it, because the same institutions blamed for suppressing crypto are the ones architecting its next phase. Honored strategists, this is where the catalyst emerges, and where the weak hands get shaken out by design, because every engineered move requires fear as fuel, and XRP and Bitcoin are currently swimming in perfectly manufactured FUD that is so obvious it is almost insulting, yet it is working exactly as intended. Think about it. Bitcoin is constantly framed as overheated, too crowded, due for collapse, while XRP is framed as suppressed, forgotten, legally risky, and dead on arrival. And yet behind the curtain, the same institutions pushing these narratives are hedging, positioning, and building. Ask yourself why every negative headline conveniently lands right before major infrastructure announcements, regulatory clarifications, or liquidity events. This is psychological warfare 101. You do not sell the future, you scare people out of it. And the catalyst most are missing is not a single announcement, it is convergence. Bitcoin's role as digital collateral is colliding with XRP's role as transactional plumbing, and that collision only happens when the system is under strain. Rising debt, unstable fiat regimes, cross-border settlement pressure, and geopolitical fragmentation all demand speed, neutrality, and liquidity. And that is exactly when FUD gets loudest, because insiders need time to position. So when influencers scream XRP is centralized or Bitcoin is doomed by regulation, understand that these talking points are recycled on purpose because they exploit emotional triggers, not facts. The FUD defense is simple if you stay logical. Decentralization is not binary, it is contextual. Regulation is not death, it is filtration, and suppression is often incubation. Remember how early internet infrastructure was boring, regulated, and mocked while speculation got all the attention? And then suddenly the boring pipes owned everything. This is that moment, and the catalyst will not ring a bell. It will feel anticlimactic at first. A policy shift, a banking partnership, a liquidity facility quietly going live, and by the time retail realizes it was the signal, price will already be adjusting violently because markets do not wait for consensus, they punish disbelief. Should distinguish survivors. Now we confront the part everyone pretends to care about but few actually understand. Price. Because price is not prediction, it is justification after positioning. And the mistake retail keeps making is demanding price first instead of structure. So listen carefully. Bitcoin price justification is being built on legitimacy and balance sheet integration, not hype cycles. When Bitcoin becomes acceptable collateral, its valuation stops behaving like a casino chip and starts behaving like a strategic reserve asset, and reserve assets do not move politely. They gap violently when confidence flips. That is why ranges compress before explosions. Now XRP is even more uncomfortable for people because its price justification is not narrative-driven, it is utility-constrained, meaning if liquidity demand hits its rails, price has to adjust mathematically, not emotionally. And that is the part that scares people because it feels too mechanical, too unfair, too sudden. Imagine trillions needing fast settlement with minimal friction, limited supply dynamics, and regulatory clarity that funnels demand instead of diffusing it. And ask yourself, WTF happens to price when that pressure turns on? It does not stair-step, it reprices. And the final warning is this. Most people will not miss this because they were stupid. They will miss it because they were emotionally exhausted by FUD, bored by sideways action, and convinced by influencers that there was more time. But markets do not reward patience alone. They reward conviction at the moment of maximum doubt. And right now, doubt is thick, sentiment is weak, and narratives are confusing by design, which historically is exactly when the biggest reallocations occur. So understand this clearly. If you are waiting for universal bullish consensus, you are volunteering to be exit liquidity. And if you think institutions will announce their full intentions before price moves, you have misunderstood how power operates in markets. Respected holders, this is where everything snaps into focus and the illusion of safety dissolves. Because what you have just heard is not a promise of easy gains. It is a warning wrapped in insight. And the final truth is brutally simple. Bitcoin and XRP are not competing in the way social media wants you to believe. They are being assigned roles in a financial system that is quietly upgrading itself while retail argues over price targets and tribal narratives. Bitcoin is being normalized, legitimized, and absorbed as collateral and macro hedge, while XRP is being hardened, regulated, and engineered as a liquidity rail that institutions can actually use without asking permission from chaos. And when those two roles activate together, the market will not give polite entry points or second chances. It will move with indifference and speed. And the people who survive will be the ones who understood the setup before the headlines caught up. Remember this: mainstream confirmation always arrives after positioning is complete, regulators speak softly after deals are done, and institutions never ring bells for retail. They leave footprints, and those footprints are all over the data right now if you know where to look. So the final question is not how high can XRP or Bitcoin go. The real question is whether you had the discipline to see through the noise, hold through boredom, and act before certainty replaced opportunity. Because once the narrative flips and the media starts celebrating what it previously mocked, the asymmetric window will already be closed. And at that moment, most people will say they always believed. But belief after the fact has never made anyone early, and in markets, being early is the only advantage that actually matters.